Hey, Matt Green here. In this week's weekly recap, we're going to be going over a lot of really cool things that we're working on. We've got a project that we're developing. I call it the cornfields. I'll be going over that with you today. Another project that we're working on that we've got in the works with a partner of ours. And I'm going to show you some processes that we're using to improve our company's efficiencies. And then I'm going to talk to you about a $350,000 equity investor that we just closed a deal on with. Hey, Matt here, and this week we had a ton of progress and a lot of exciting things that happened last week that we made some good headway on. One of the main things that we got done was we kind of committed to a capital raise investor so we did a capital raise and we accepted an investor to join into one of our projects. It's a 45 unit, it's about $6.7 million, the project value, and he's going to be putting in about $350,000. So with the deal structure that we did with that deal, is pretty interesting. It was creative, and I think it's going to work out really, really well. And it's a strong deal. It works good for both sides. It's we give up 19% of the company. We give up 19% because our bank will allow us to give up to that percentage rate of the deal before they would make somebody or an investor sign on to guarantee the loan. So that's why like 19% or lower is the magic number. So he's going to put $350,000 in the deal, get 19% of the deal. He's not going to participate in any cash flows or distributions from what the property makes, but we're going to give him an 8% preferred return. So he'll get 8% on his money. So let's just run the numbers. So he's going to get $350,000 that he's going to invest into the deal times 8%. So he's going to get paid about $28,000 per year. We set the term for about 3 years, so he's going to make about $85,000 for putting this deal together over 3 years. So it's going to be a good deal. And then after he gets paid back his principal investment, the 19% just dissolves. It goes away. So that's what's really cool about the deal is that we give up ownership as collateral for the money, but after we pay the investor back, it's actually going to burn off and we won't have to participate with any distributions or refinances or sale proceeds or upside. We're just basically giving him a flat 8% return on his investment. So it's going to be a pretty cool deal. We're able to get it all together. We're actually just working on the operating agreement and getting things squared away with the shares that we'll be giving away, and we're getting all those pieces together. So excited to have that done. We're also, on another note, we're working on another land deal that we have in the works. I like to call it the cornfields because it used to be an old farm, and they'd have every Halloween like the corn maze. You'd go through the maze and you would just go with your friends and just something to do during the Halloween time. And that's what that property used to be. And then when COVID hit, the property that the owner had, the business that was there, that corn maze, through COVID, they weren't able to continue operating the business. And then the owner was also from Toronto, so it was just a whole ordeal for them to keep the business going. So we ended up just putting a deal together with them, and we're actually putting a contract together on it. So it'll be a neat deal. We're hoping to get about 150 units on that site. So that should be coming together nicely. We sent out today the information to get the contract together. They accepted our offer through a letter of intent. So we're making good headway on that. So we'll start due diligence after they sign the contract and get the whole process going. So we've got that deal in the works too, which is pretty cool. And then in other things that we're working on a new Main Street project. So a friend of ours has this project on Main Street. It's about a 4-acre parcel, and he was interested in partnering on putting apartment units on the site. So we're going to end up putting a project together and putting all the pieces together to put a new construction building on this site. So this project, it's got an existing building with office tenants in there, so we'd have to demo the building and then rebuild our new building on this site. We have to go through the town board for zoning, and variances and site plan approval. So it's going to take a little bit of time to get it all together, but it's going to be a really neat project. And I really recommend land deals for people that have a little bit more experience in real estate, because it is more complicated. There's a lot more steps to it than if you were just doing a straight up acquisition of an apartment deal and renovating it or just managing it. That's a little bit easier than just going into a land deal, not knowing anything, and then trying to put a whole project together. It's a lot more work. So if you're just starting out, probably the acquisition of apartments would be the best route to go. But if you have a little bit of experience and you know construction and getting entitlements from your town, then construction can be also a good route. But probably for someone that has a little more knowledge into that field is the best way to go with that, because you got to know the numbers with construction, the budgets, especially with lumber right now. Everything's going crazy, so it's just really important that you know your numbers if you're going to do construction deals. So a lot of good stuff this week. Made a lot of good headway, and everything's going pretty good. We also are in the process of implementing a new filing plan. We used to have a lot of documents at a separate location, and now that we are into our new office, we want to kind of bring everything into one central location. So we're trying to consolidate things and make things more efficient. And that's what's really hard about expanding and growing, is trying to make the processes really, really efficient when you're growing. And you have to make things better and keep improving upon things. And improving your systems and models, it's really, really difficult to stay on top of it all, but you have to be really persistent and just, you have to focus on it. I think you have to want to make every department better, and you have to focus on ways and ideas of how you can make those departments better. So you have to think about the accounting, the filing, the leasing, the marketing, all these different categories. You have to think about each one separately and then figure out how the best way to do each one of those categories is going to be, so you can make it the most successful as possible. And it takes a big team to get it all together. You can't just do it all yourself. As you're starting out, you'll do everything yourself, but as you grow and you acquire more assets under management, you're going to have to build a team to make sure everything flows and just continuously gets better, over time. So a lot of big progress, a lot of good things happening. We have a lot of new things coming up that we're working on, so we should be really cruising. But you got to get out there, continue looking for deals, get deals together. Multifamily real estate is one of the best investments you can make, so it's something that you have to take really seriously.